Welcome to the first lesson of our swing trading course. In this module, we'll be taking our first steps into the world of swing trading. Swing trading is a short-term trading strategy that aims to capture gains in a stock within an overnight hold to several weeks. Unlike day trading, where positions are closed out before the market closes, swing trading involves holding stocks for longer periods. This approach allows traders to benefit from price swings that occur over a span of days or weeks. Before diving deeper, let's understand the fundamental concept of swing trading. Essentially, it revolves around identifying and taking advantage of price swings in the market. These swings are the peaks and valleys formed by the fluctuation in stock prices. By catching these movements, swing traders aim to make profits by buying low and selling high, or selling high and buying low. It's a dance with the market that requires a good understanding of technical analysis and market sentiment. One of the primary reasons swing trading has gained popularity is because it requires less time than day trading. You don't have to be glued to your screen all day, making it a suitable strategy for those who have other commitments but still want to engage actively in the stock market. However, this doesn't mean it's effortless. Successful swing trading demands a solid grasp of market dynamics, patience, and discipline. Setting up your trading account is the next critical step. It's essential to choose a broker that offers low commissions, efficient execution, and robust trading tools. These tools will be instrumental in analyzing stock charts and identifying trading opportunities. Once you have your account ready, familiarizing yourself with the trading platform and its features will be your priority. Knowing how to navigate the platform smoothly will save you time and help you make quick decisions when the market moves. Swing trading, like any trading strategy, comes with its risks. Market volatility, incorrect analysis, and emotional decision-making can lead to losses. Therefore, it's crucial to approach swing trading with a well-thought-out strategy and a risk management plan. Understanding how much capital you're willing to risk on each trade and setting stop-loss orders to protect your investments are vital components of risk management. Remember, preserving your capital is just as important as making profits. The beauty of swing trading lies in its flexibility. Depending on market conditions and personal preferences, swing traders can adopt various strategies. Some may rely heavily on technical indicators, while others might focus on fundamental analysis. The key is to find a method that works for you and stick to it. Consistency and continuous learning are your best allies in the journey of swing trading. As we embark on this course, keep an open mind and be ready to absorb as much information as possible. Swing trading is not a get-rich-quick scheme. It requires dedication, practice, and a willingness to learn from both successes and mistakes. In the upcoming lessons, we'll delve deeper into the intricacies of swing trading, starting with setting up your trading account and tools. So, let's get started and take the first step towards becoming a proficient swing trader.